And then as far as misconception goes, I think some of the misconceptions out there, and this has been widespread for a long time, that people, you need 20% down or you have to have perfect credit to buy a home. So the barriers to entry, I still think is a big misconception. You do not need 20% down. Despite what some people may say, you do not. You do not have to have an 800 credit score to buy a home. Do some of those things help, or could they help? Sure, absolutely. But it is still not needed, and I still see that as probably one of the most prevalent misconceptions out there.
Holding my breath and I'm ready to go. I'm falling right in and I'm ready to go.
Broadcasting from Central Kentucky, the headquarters of the Dr. My Budget podcast, where we discuss how to grow your personal wealth without having a major impact on your current lifestyle. Here is your host, Dr. Dan, the Finance Man.
Welcome, everyone. Today is July 11th, 2023. Hope you're having a great week. I know it's been a couple of weeks since I've been on. Had a couple of things that we've been going. If you dig the new intro, let us know. Drop a comment below whether you like this intro or the old intro better. I know we're anxious to dive into the episode. Before we do that, we're going to take care of a couple of housekeeping items. Today's episode is sponsored by Nexa Mortgage, NMLS ID 2296654. If you're thinking about buying or selling a home anywhere in the country, or even investing in a home, we've got a team of professionals in both the real estate and the mortgage industry that are on standby to answer your questions so you can make the best informed decision on how to proceed. You can learn more and reach out to me at email at drdan@drmybudget.com, or you can call or text on the Make Kentucky Home Group at eXp Realty phone line at 859-429-0552. And let's dive in. My guest today is no stranger to the Bluegrass State. Having graduated from Henry Clay High School and Transylvania University, throughout his academic journey, our guest has balanced his passion for education with his love for sports. Today, we have the privilege of tapping into his wealth of knowledge and expertise in the mortgage industry. So sit back, relax, and get ready to discover invaluable insights that will help you master your finances and achieve your home ownership goals. Without further ado, let's dive into this enriching conversation with the one and only Mitch Florence.
I appreciate the introduction, Daniel. Thank you very much.
You are welcome, sir. So let's kind of dive in. Can you start by telling us a little bit about yourself and your background in the mortgage industry?
Yeah, absolutely. So you had kind of mentioned in the introduction, Lexington native, which I don't find we see too much anymore, which is kind of interesting. But graduated from Transylvania University with an educational background in finance, which kind of led me into the banking industry. So started banking in 2010. Had the privilege of working for some excellent banks here in the local community. Worked my way around the banking kind of sector, doing different things. Honestly, started as a teller, which was great experience for some of the stuff that you and I'm sure we'll talk about, financial literacy related. But worked my way around the banking industry and then eventually started lending, gravitated towards lending. At the end of the day, I enjoy helping people make financial decisions. And lending is certainly a part of that in modern finances. So that's kind of what I've been doing for the last, call it 6-7 years, is really concentrated on lending, and in mortgage specifically for the majority of that.
Okay, so what are some valuable lessons you've learned throughout your years of experience?
Yes, God, we could probably do a whole podcast on each one of those topics, but some valuable lessons, I think, and I'd mentioned a key term, financial literacy, right? I think it's imperative that all of us as members of society have kind of a grounding in some sort of financial literacy. Now, we all don't have to be Warren Buffett, right? But I do think having a basic understanding of principles such as budgeting, or if you don't like the word budgeting, creating a spending plan, that I think is imperative for all of us to do. And that's something, as I've gone through the years in banking and mortgage, that I've seen that we could truly improve upon as a society is the financial literacy aspect.
Okay. So how has the mortgage industry evolved
Mm,
since you first got started?
yeah. Yeah. Good question. So remember back, starting in 2010, right? That's post '08. So if we think back post most recent housing crash, um, a lot has changed, quite frankly. Banking, mortgage related, a lot of it regulatory in nature. I mean, I don't think there's any disputing the fact that banking and mortgage regulation has changed a lot post '08. And I've kind of got to see that firsthand on multiple different sides of the lending coin. And, we could extrapolate out some of those, but other ways that the mortgage industry has changed, I think most recently, something that we will continue to talk about, and I know you and I have talked about the rise and use of technology. That has changed a ton in the real estate and mortgage world. And now, especially this year, the use of AI, I think, is another major change, and we'll continue to talk about that.
Very cool. So can you tell us about some exciting projects or initiatives that you're currently involved in?
Yes, one thing that I've been passionate about for really my entire career has been community involvement, industry advocacy. Within that, one exciting thing that I've been a part of and fortunate to been a part of is I am a board member for the RCHF, which is the Realtor Community Housing Foundation. So obviously, mortgage and real estate related. They're an excellent nonprofit arm of the local association. One thing that we're working on right now that's coming up is their gala, which is in actually September. It's a wonderful thing to be a part of. Really generating revenue for RCHF to help continue to support the communities that we work within. So, side note, shameless plug. Bluegrassrealtors.com. RCHF has a landing page. Come see us in September.
Okay, very cool. So are there any new trends or developments in the mortgage industry that you find particularly interesting?
Yes, and I think kind of going back to what I had mentioned a few minutes ago as far as changes, I think probably two of the most popular trends relate to technology and then specifically AI. Um, some of those are going to look different to different mortgage originators or different companies, but the use of technology has expedited, frankly, the whole process. Whether that looks like, online applications to automatic verifications to, in some cases, automatic or waiving appraisals, um, and then the use of AI, and you can insert the use of AI in probably any part of this process, whether it's revamping an originator's lead generation, whether it's scripting, whether it's use within the process. AI has been a huge kind of trend that we've seen, especially over the last, I'd say, 6 to 12 months.
Okay. So what advice would you give someone who is considering getting a mortgage for the very first time?
Yes. So number one, and I would insert this about, or I would insert what I'm about to say about any financial services is work with someone you trust. Work with someone who is an industry expert. Um, no, that does not always mean that I can Google, hey, who can get me the mortgage pre-qualification the fastest? Um, the rise of information and technology has been great, but inevitably, you and I are still in the trenches, as they say, within the real estate and mortgage world. And that is my number one piece of advice: is to work with someone that you trust.
So what are some common mistakes or misconceptions people have about mortgages, and how can they avoid them?
Yeah, and there's so many. Concentrating on a few. Number one, I think one of the biggest mistakes that I find is people don't treat, and this is kind of crazy to even say, but people don't treat buying a home as a financial decision. I do believe we need to approach this from a financial, we are making a financial decision. Statistically, most likely the biggest financial decision that most of us are going to make in our life. So I
At
do
least up to
think
that point, anyway.
absolutely,
Yeah.
yes, you're correct. So within that, I do think we need to think about this from a budgeting aspect. How much do we want to spend? How much, where does our savings need to be? Not a lot of people approach it. I think in the modern world, it's really become, oh, my dream, air quote, dream home popped up on Zillow that I got notified about. I will need to get pre-qualified now, and we just don't think about that. Um, and going back to what I had mentioned about advice, working with someone you trust. If you work with someone you trust, hopefully you can navigate that part of the thought process on the beginning, and alleviate that mistake. And then as far as misconception goes, I think some of the misconceptions out there, and this has been widespread for a long time, that people, you need 20% down, or you have to have perfect credit to buy a home. So the barriers to entry, I still think is a big misconception. You do not need 20% down. Despite what some people may say, you do not. You do not have to have an 800 credit score to buy a home. Do some of those things help, or could they help? Sure, absolutely. But it is still not needed. And I still see that as probably one of the most prevalent misconceptions out there.
Okay. So, how can potential home buyers financially prepare themselves before applying for a mortgage?
Absolutely. And I love that word, preparation. I think it's key in any financial decision, especially one such as this. So going back, hey, starts with working with someone you trust, right? That's going to be um, one of the biggest pieces of the preparation puzzle. And then let's address some of the common just financial aspects of lending, whether we're talking about credit card, auto, mortgage. All right, we got credit, employment, income, right? So credit, kind of a tidbit of a piece of advice here. Even if you're not talking to a lender in an official capacity, you as a consumer still have access to a free copy of your credit report, at least annually. So hey, check your credit. That is a big thing that I think people can get ahead of, is finding out what's being reported on credit. Um, Income and employment. Obviously, in order to make a financial decision, we have to have some finances to work with. So being employed, income, having those things planned out or aligned is another big pieces of that preparation. Um, Once we have those pieces, we can talk about a budget. I think it's a great idea to have some kind of understanding of how much you want to spend each month on your housing expense. So going through that, or walking through that, I think goes a long way as far as preparing yourself to have that conversation to buy a home.
So, you talked about like employment and their uh, you know history and things like that. Are there any kind of minimums that they need to be aware of?
Sure. Um, you're going to hear so many different answers to this question. Um, and the answer is the all encompassing answer of it depends, right? Certain loan types are going to have different requirements as far as it relates to employment, income, credit. Um, if you want some general benchmarks, a lot of people are going to say or address your 2 most recent years of employment history. Okay. No, that does not mean that someone has to be employed for 2 years, but we need 2 years of some kind of history. Quick example of that. What if someone graduates college, graduates from the University of Kentucky Engineering School? They have not been employed before, but they get a job. They get a job offer paying a salary of $60,000 from a firm. Yes, we can use that income. And yes, we could realistically tie together that they have a 2-year history of experience because they went to college and graduated with an engineering degree. Um, so benchmark that a lot of people are going to use is 2 years of employment history. That can mean different things in different contexts, but that's a good rule of thumb. As it relates to credit, a lot of people have some misconceptions here. Now, I can tell you that most conventional loans, so Fannie Mae, Freddie Mac, it's going to be hard to go below 620. So that is a popular threshold that a lot of people aim for, is 620 or above. I'll go ahead and say that commonsensically, the higher the credit score, the better. I hate to generalize it like that, but that is typically true. And then beyond that, another kind of common threshold is 580. So a lot of government-related loans, FHA being one of them, you can still put 3.5% down to a 580 score.
Okay. And for those that are not familiar with the FHA, what is that exactly?
Yeah. So, and you can insert this into the common misconception. For some reason, I think FHA has that misconception of standing for first-time home buyer. FHA does not stand for first-time home buyer. Actually, FHA actually stands for Federal Housing Administration, and it's obviously a government-related loan. It's been around for decades, and it is a great option to consider. Why? Few reasons. Number one, it does require a minimal down payment, 3.5%. It is accommodating to a wide credit range. Again, some loan types may have certain thresholds. FHA is one that you can go down to 580 and still put 3.5% down. Some other kind of cool things about the FHA, in my opinion, and you can insert this into the house hacking discussion, you can put 3.5% down and buy a 2 to 4 unit property as a primary residence as long as you live in one of the units, right? That is not necessarily the case with a conventional loan, as an example. So FHA is a great loan type to consider, especially for first-time home buyers, in a number of different contexts.
Okay. So you mentioned on like the 620 and 580 kind of being like the minimums. So how can individuals improve their credit scores and financial standing in order to secure some better mortgage terms?
Great question. And that goes back to the planning and preparation. I always think, we got to know where we're starting from, right? So people, again, access their free credit report. But ways to improve credit. Number one of the biggest keys to credit is going to be making on-time payments. There's no way around that. So pay your bills on time. Some other, common things that credit or can affect credit is what they call credit utilization. Okay. And this goes back to some financial literacy things. Credit utilization often is going to refer to the use of revolving accounts. So I always think it's easier to talk through examples. So if I have a credit card with $1,000 limit and my outstanding balance, I've used $1,000 of it, even though I'm making my payment each month, my credit is essentially maxed out. So my credit utilization is high. I'm using a lot of my available credit. If I pay that down, and you'll see some different rules of thumb, but let's say I pay it down to below a 30% utilization. That can drastically improve credit. Is simply utilizing or leveraging credit in a better way. So make payments on time, keep credit utilization low. Okay. Having a diversified debt portfolio, meaning I have different types of loans. So if I have an installment loan, if you have an auto loan, that's an example of an installment loan. I make a payment each month. If I have a credit card, that is an example of a revolving account. So having different types of loans can also help. But those are probably the biggest keys that I would say is number one, have an idea of where your credit's at. Make your payments on time, keep credit utilization low. Those are some good points.
Now, I had heard that, and correct me if I'm wrong, but like the sweet spot on that utilization is if you can get it like below 10%, it's almost golden.
And I would generally agree with that. And that's why I always tell you're going to hear some differing opinions on those thresholds. Utilization below 35%, 25%, 10%. I mean, if we're being honest, keeping utilization, again, similar to credit, the higher the credit score, the better. The lower the utilization, the better. So paying it down below the 10%, if you can do that from a budgeting standpoint, absolutely, I do believe that would improve your credit more so than 35 or 25% utilization.
Okay. So, and now we're going to address like the elephant in the room, the thing that's on everybody's mind. So, what factors influence the mortgage interest rates? And how can consumers stay informed about rate fluctuations?
Absolutely. Great question. And this, you could probably insert this into the misconception. I think people's perception of rates, and that has really changed over the last couple of years with as kind of publicized and widespread as everything is in the media. But in the truth of the matter, a lot of different components affect your rate. If someone calls me and they said, "Hey, Mitch, I'm buying a home," I don't have one singular rate that I give them. Okay. It depends on a number of factors. A lot of them are individualistic, but some of those factors include what type of loan we're doing. Okay. A conventional loan may be priced differently than an FHA loan that might be priced differently than a jumbo loan. So what type of loan you're doing matters. Your down payment, which is going to affect your loan to value. If someone's putting 3% down versus 5% versus 10% versus 40%, those could all have different pricing metrics associated with them. Credit score, as you alluded to, and you're correct, you can, in some cases, get better terms if you have better credit, right? So if I have someone with an 800 credit score versus a 700 versus a 600, there could be different rates associated with that because of the credit score. And then you can get real granular. Are we waiving escrows? Are we locking for 30 days versus 60 days? That can affect pricing. So in reality, there are a number of different factors that can affect someone's rate. And to your latter part of the question, how can we best stay ahead of that, or how can we stay informed of that? That goes back to my tried and true number one: work with someone you trust, right? Most all mortgage professionals should be able to get real-time updates on the marketplace. And I know someone as yourself stays on top of these things. A lot of it with your trusted partners in this industry. So that's a great way. There are a few, I think, free pieces of information that I like. Shameless plug, no affiliation. Mortgage News Daily, I think, is a pretty good free resource for a lot of people. But just understand that, again, your rate is going to be based on a lot of individualistic factors.
Okay. So are there any government policies or regulations people should be aware of regarding mortgages?
Yes. There, one of the things I mentioned at the beginning that I have seen change personally firsthand is the amount of regulation that the industry's seen. And probably that'll be a continued discussion as time goes along. I'll concentrate on one, and this has been a hot topic that I've been involved with on the advocacy front as well, is something that they call trigger leads. I don't know if you've done a deep dive into trigger leads, but let's say that someone submits an application for a mortgage loan today.
Mm-hmm.
I would venture to say there's a high likelihood of them getting called probably no less than 24 times within a couple of hours, most certainly within a couple of days. And that is kind of an industry phenomenon that they call trigger leads. So this has nothing to do with a mortgage lender, no matter if you're talking to me or you or someone that works at a bank. What happens is there are certain companies that pay for services that when a consumer's credit is pulled in relation to a mortgage loan, they get notified. They call it a trigger lead. It's been triggered because someone has submitted an application or had a credit report pulled in relation to a mortgage loan. And then, they're going to call you and spam you with literally dozens of calls over the preceding hours and days. So that's an industry hot topic that has been brought forth to Washington. that is brought to the attention of the CFPB, which is the Consumer Protection Finance Bureau. I think that will eventually go away, but that's probably one of the big hot topics right now as far as policy or regulations related. And I would say hopefully some of that goes away soon.
Okay.
So I'd say if you've had that happen to you, if you've submitted an application for a mortgage loan and then you've been contacted by, who knows who else, it's not the lender's fault. That's something that's credit bureau related.
That's great advice. And if you're enjoying the content, we would really appreciate it if you drop a like, subscribe to the podcast, give us a like. And, I know a lot of people are like, okay, well, Mitch, last summer rates were like 4 or 5%, and now they've jumped up to 7. How did we get there?
Magical question, right?
Yeah.
We got there. I think this, as far as this being an interest rate increasing environment, was inevitable post COVID, right? Realistically, we're still on the lower end of the historical spectrum of the 30-year fixed mortgage rates. If you go back and average it out over the last 40 to 50 years, we're still on the lower end of that spectrum. I think that people have kind of a misconception of the rate environment just because we have a short memory. And hey, we remember in 2020, 2021, 2022, when rates were 2, 3, 4%. We have to remember that it literally took a global pandemic in order for us to get to that environment, which hopefully we will never see again. Now, as far as rates go, one of the biggest correlating factors with the rising rates environment has been inflation, which has been a buzzword and a hot topic for a number of years now. But I would say we as an industry, we do think that mortgage rates will eventually come back down. I think the economic data as it relates to inflation, as it relates to overall economic performance, jobs, labor market, as those continue to be more bond favorable, we will continue to see, we will see some interest rate improvement, but it's going to take some time.
Okay. So as we begin to wrap up, how can people get in touch with you?
Sure.
For further questions or assistance with their mortgage needs?
Absolutely. So everybody, Daniel can always introduce us. So you have my contact information, but I tell people in this day and age, if you don't have my cell phone, if you cannot get me on my cell phone, then I'm probably in the wrong business. So free invitation, call me, text me. But I also have, a website, www.guaranteedrate.com/Mitch Florence. That's a direct link to me, all of my contact information, as well as application information, as well as some helpful free resources as well, calculators, other news articles as well. And then I do feel like we have to be involved on the social media platforms. So LinkedIn, Facebook, Instagram, I do have professional handles on all of those platforms as well.
Very cool. So as we get ready to sign off here, is there anything else you would like to share about mortgages or the mortgage industry in general?
Yeah. I think that home ownership, which is, hey, what really you and I are talking about, what you and I are passionate about, home ownership is truly one of the cornerstones of our economy. So I love what we do. I think it is truly excellent that you've taken the time to provide this content for everybody. So thank you, Daniel. I think it is important. The consumer education aspect of what we do, I think, has been forgotten and is of the utmost importance. So, to all your listeners, I can say, be informed, stay informed, work with true professionals, because this is an important decision. And there are a lot of moving pieces. There are a lot of moving pieces in today's environment. So working with someone that you trust, that we can stay ahead of those, navigate the conversation, that is going to make your life, your real estate and wealth building experiences so much better.
Okay. And then last question before I let you go and hop off here. Do you have any final tips or recommendations for individuals planning to buy a home or those that are looking to refinance their mortgage?
I'm kind of beating a dead horse, right? But working with true professionals, in my opinion, what you and I do, what you do on the financial and real estate side, what I do on the mortgage side, we're much more than just an originator. We're an advisor or consultant, and I do think you need to take that approach in your business. So work with someone that is willing to take the time, have a consultation or advisory discovery discussion with you, and find out what your goals are. I would say some specific tips is think about it. Think about what problem were we trying to solve? What goal are we trying to achieve? Um, you know, if you're trying to get into investment real estate just because you saw an HGTV episode or flip my house or something, like it may not be the best. I mean, the best reason. So, really identify what your goal is with getting into this. I think that's a huge helpful tip to start with.
All right. Well, thank you so much for joining me today. I can't thank you enough for taking time out of your schedule to share your advice and wisdom with the listeners. So if you've really enjoyed this content, would really appreciate it if you would drop a like, subscribe, comment, and till then, we will catch you next time around.
Thanks, Daniel.
Holding my breath and I'm ready to go. I'm falling right in and I'm ready to go. I